And what we're going to do today is we're going to do a bit of whistle stop because the simple reality is all of us, every single person knows we should be doing some things about our finances. We should have a plan, whether it's at a business level or at a personal level. But then things come up and get in the way and we become distracted. And so what we're going to do today is we're going to cover off a lot of things you need to think about. Some things you can go away and self-reflect at, some things that might scare you terribly. We're going to talk about kind of the recession and some things you need to think about. And we're going to try and straddle the challenges of both the business owner and the individual. But what will help as well is I'm going to do a poll in a second to just figure out who we've got in the room. And that poll will be anonymous to everybody else. But I need to introduce myself first because I run a financial advisory firm. I'm one of the Pimento professional services that is there under the financial advice guys. I do a lot of work with the Now Next Wise guys that are our business consultants and helping you understand how do you make your business grow, how do you plan for exit. But we've been working with Pimento. I've been there for a couple of years now. And I see a few familiar faces on here that I might have crossed with at the recent conference. But actually what we have to do regulatory wise is I'm regulated and authorized by the FCA. I'm a appointed representative of St. James Place, and that's my regulatory bit out of the way. So I'm going to do the brief, and then I'm going to turn it over to ask you guys a couple questions. Now, the brief itself is pretty wide, because I'd love to say it's going to be fun. But I'm going to talk about things like you dying. I'm going to talk about you getting poorly. I'm going to talk about recession. I'm going to talk about money. So unfortunately, it might not be all the giggles you see in the top corner. But we are going to talk about your money. We're going to talk about your future. We're going to talk about what you need to think about. And some of this stuff you need to think about yourself. Some will reinforce things you already know. But the main thing I want to get from you is I want to get participation. And again, because we're a relatively small group today, just interject, shut me up, ask a question, and we'll find a way. And that might mean if we get a lot of engagement in a couple areas, we might skim over a couple things later on. So I'll try my best to manage the diary side or the time side. But what I do want to start with is just really quickly, we've just launched this poll. Help me understand. I'm going to do a couple of these. And sorry, I've just taken Spencer's thunder because he was going to do it. Tell me, what are you as the business owner? So we've got couple limited company sole directors, limited company multiple directors. We've got a sole trader. Okay. So we've got a really good split here. And we've got one person employee, not owner as well. So that's okay, because what we'll do is we'll cover some things you need to think about personally and as a business. And some of the things we're going to discuss will have a bit more bearing on limited companies, and some will actually be on a sole trader because you and a business are one thing, you're intertwined, and that sometimes can be quite difficult. So let me not share that. And just so I understand as well for the next poll, given the cost of living crisis and what's going on as a business, which one best describes you? Yeah. And there's, we're in the we'll be okay, we're concerned. That's typically what I'm seeing. There's a lot of people as well when I do financial education in the workplaces where you've got lots of employees there. The really concerned mark tends to be really, really high. So it's in a good position here that you guys are concerned, as everybody needs to be right now because of the amount of change that's going on. But there's a few people that feel like you'll be okay as well. And there was only other question I had. Let's do that one. Actually, no, I'm going to stop the polls right there. Oh, except I've now can't move this. Hold on. There we go. I might come back to the polls later on. So the agenda today. Now, normally when I speak to business owners and when I do a session, I would do it on you and about you and your business and the intertwined nature between it, because one is not an island. We do a bit around protect and control, and I'm going to kind of put those in the same section. But we also tend to do a lot around people. Now, people as an agenda point right now tends to be a meeting in its own right, because it's that challenge of should I be managing down my resource, or how do I find the right people, and how do I engage people? And there's so many people concerned about finances right now. So there's a whole nother piece that we do around the people side that we're going to skip for today based on time. So I should have said as well, make sure as well, if you don't want to ask a question, you can put something in the chat box if you don't want to be vocal. And actually, Spencer or Teresa, if you can monitor that and just jump in when the time is right. But we're going to go into you. And this picture here, oh my God, I saw this and put my head in my hands almost in despair because I searched on one of the places where you search for images, and I said, I put in business owner, and this is what they came up with. Now, I'm not being funny. Remember my intro picture. Anybody that thinks the one on the left is what a business owner's reality right now is completely misaligned. There is no way that is what we're doing with. And when you look at what we've just had to do with in the last few years, we've had Brexit, we've had COVID, we've had Ukraine and Russia and war in Europe, we've had Bojo getting thrown out of politics. You've had the Queen passing, which was the one constant I think we've had as stability. And now you've got a new prime minister that came out and did a recent announcement and has everybody looking at the political sphere, both in the UK and abroad. And now, obviously, we've got the clear view of recession. There is no question, when you look at the concentration of that, each one of these used to be a once in a decade event. And now we seem to be having them almost sort of on a weekly event, something like this is arising. And as a business owner, it's incredibly difficult for you to be clear on where are you going and what are you going to do. But there's a model that I always try and apply, and I do this around financial education, but it's a model you can apply to everything. So genuinely draw two circles, Venn diagram, we all know what they are, things that matter and things you can control. Now, the simple reality is there's so many things that matter out there right now. Inflation, interest rates, oil and gas, you name it, the list goes on and on. But the problem is so many of those we cannot control. And the problem, I think, as a sort of society at the moment, and as individuals, you become so focused on the stuff you can't control, you get lost in the wind. So let's take energy prices. It absolutely matters, but we can't control it. So part of the things we're going to talk about today are, well, cut unnecessary spending. I'm going to talk about the David Brailsford and the marginal gains and what you can be doing daily to just get 1% better at everything you do. And don't focus on the thing you can't control. Yes, it matters, but if you can't do anything about it, kind of forget it. Focus on what you can do and what you can control against those things that matter. And you will feel like you're moving forward rather than the anxiety that all of these messages that are coming out, and it doesn't help. Liz Truss put out an announcement with Kwasi that actually caused all the final salary pension schemes in the UK to get seriously concerned because of what happened in what's called the gilt market. I won't go into the detail there. But it's never explained to everybody in the news, saying that actually it's just a small cohort of pensions that are at risk. The news came out and said all the pensions are at risk. And now I'm getting constant phone calls from people going, are we okay? And so, yeah, that news story is completely irrelevant to anything that matters in your world. So what you've got is this news cycle is becoming really difficult, and it's hard for us to see past that. So focus very much on what matters and what you can control, and encourage your employees to do the same thing, because actually then it will help them focus on things that are there. And when we talk about the news cycle, this is the problem we've got. We are living in this little fishbowl. We all suffer from what's called recency bias. And that recency bias is, oh my goodness, we have inflation, we have interest rates, we have war in Ukraine, we have government issues, we have a recession coming. We're never going to get through this. Well, I'm not being funny, but 2 years ago, we all thought we were going to die. COVID came, we weren't allowed to leave our house. Nobody knew what was going to happen. And actually, we got through that. 2008, the credit crunch came. The whole global financial system was on its knees. Banks that were the stable in the core of our financial system were getting bailed out. Well, we got out of that and we had the biggest bull run in history. Now, at that time, we couldn't see past that. And what's interesting is if you look, the red line is the global index, global financial index called the MSCI World. The purple line is inflation, and the green line is your cash. Now, in the last 3 months, what's interesting, I haven't seen one news story say that between the middle of June and the middle of August, the market was up by 10%. Now, what had happened then is there was a slight softening of inflation in the US. Everybody started to get a bit giddy, thinking, oh, interest rate hikes are going to stop. So the market was almost recoiled, preparing itself for all the bad stuff. And when suddenly there was a glimmer of hope, it started to move up really quickly. Now, right here in the middle of August, there was a big meeting in the US where the Federal Reserve came along. It was Jackson Hole, and they said, we're not stopping the interest rate hike. And then suddenly the market started to go back down. So when you talk about the kind of wider finances, everybody's preparing for the negativity, But actually, I think when you come out and that inflation gets curbed, or something happens to the war in Russia, Ukraine, we're going to see quite a strong and quick recovery around things, just as we saw with COVID. Literally, we were in a position where we couldn't leave our house. We didn't know if anybody was going to have jobs. Well, as soon as we started to turn the corner and say, well, actually, as things getting more in control, the market rebounded incredibly. And actually, everybody started to come back into the workforce and coming off furlough. So although it's really negative now, and if you look in the last year, because of inflation, because of COVID, because of Ukraine and Russia, you can see the problem we've got is in the last year, the purple line, things have gone up by 10%. And actually, cash, if you had in your 90-day notice account, it's only gone up by 0.65. So you've lost 9.5% of your power, your purchasing power in real terms. And the financial markets have been all over the place because of the instability. But if we stop looking beyond today, because we're so focused on the recency and the problems we've got around recession and everything else, we actually lose sight of what's happened over time. And look at what's happened if you go back the way. Right here, if we go back 20 years, right here is where we've had the instability because of inflation and interest. Big drop right here around the 2020 mark was COVID. We had the credit crunch, we had the tech bubble burst. But if you put £1,000 in the market 20 years ago, never touched it, you would have had a 674% return. Whereas conversely, if you had £1,000 there and didn't touch it, the cost of inflation would have gone up 64% in that time. So although inflation is spiking at the moment, for the last 20 years, it's been really in control. And so everybody's wrestling with trying to get that back in place. So when we talk about the fishbowl today, you have to look beyond today. You have to get your teams to look beyond today, because we have come through these crises time and time again. And one of the things I encourage everybody to do is take the David Brailsford approach for cycling. Remember a number of Olympics ago where suddenly the UK cycling team came about and literally blew out everybody. And then they took over the Tour de France. And it was all of David Brailsford's improve everything by 1%. So if you think of you as a business owner, improve on, if you can get every quote and bid that you get out there, if you can get 1% more for it, if you can shave your cost by 1%, if when you go to the grocery store, you buy the name brand cereal rather than not the name brand, the shopping brand rather than the name brand, that saves you 1%. If you sort of, like me, yesterday, I didn't even have my heating on, but I went out, and I can't remember the last time in my recent memory, other than when I was a university student, where I went out and I had to scrape the car window, but I still didn't have my heating on. These are the decisions we need to make. Save yourself the 1%. And if you apply that and you get your employees to apply that, everything, if you can do it and you can get 1% better at everything you do, then as a consequence, as we see inflation rise, actually that will help your bottom line. And it has to be a mentality piece, because we're going to continue to see this inflationary pressure in the market over the next 18 months to 2 years, I think. But what I do encourage everybody to do is become raging alcoholics. And I do encourage you to do that. We all have this bit of, we know we should take control of our finances, whether at a company level, at our personal level. So please go out, buy a bottle of wine or two, whether that's with your business partner or that's with your marital partner. Print out all your credit card statements, all your bank statements, and just do an art project where you basically go through with 4-color highlighters. What is essential? You've got no option. There's nothing you can do. That is a cost, that is a non-negotiable. What is an essential that you can negotiate? So looking at home, every year we have it that all of our bills come to an end in between Christmas and New Year. And so we're really boring during that period where we call them all up because we've got time. And we tell them we're leaving. For one of the telephone and broadband and television firm we did it with last year, it was hilarious. We called them up, we said they were leaving. And they said, oh, well, why don't we give you an extra telly box? We'll give you twice as many channels we've got, and we'll cut your price by 50%. And we kind of went, well, okay then. Get militant on these things, whether you do it at a business level or personal. The third color, the orange, is what can you cut and reduce? What can you shave the cost on? And the fourth is the WTFs. We've all got them. You don't even know what that cost is. And then you can quickly sit down, whether that's your marital partner or your business partner, and go, okay, if everything is blue and purple in this example, do you know what? I'm okay. If there's a huge amount that is orange and pink, when we're going to become with the cost of living crisis and recession, you really need to take control. And this can be applied both personally and professionally. But doing it over wine is far more exciting. Any questions around that? Okay. So when we talk about you and your business, the simple reality is at some point you're going to exit your business. Now that might be by choice. It might be by event. It might be because of a cost of living crisis and it just not be financially viable anymore. But what I find so often is for people running a business, they've lost sight of who they are because the business is who they are. And so often when you get to that forward planning and you ask somebody, well, what do you really want in life? They have no answers. We become broken, confused, disorientated if we suddenly say, well, if my business isn't here, who am I? You need to know who that is. You cannot have a forward-looking plan unless you're clear on what are you doing this for. So I look at myself. I run a business. We've got a number of people in my team in my business. I've got a 9-year-old son. My business strategy, and I tell this to everybody within the team, I tell it to even my clients, I am concerned with the generation coming forward. I want my son to have a business that he can step into the future. So everything I do with my clients is about customer loyalty. It's about long-term. It's about brand. It's about maintaining that relationship because I want my son to have a future and a career he can step into in the future. And my clients really buy into that because they get that actually it means I'm going to do the right things by trying to help them and have that 20, 30, 40-year relationship with them and their family. Now, my son has absolutely no interest in being in my business. He's 9 years old. Last time he said he wanted to be an artist zookeeper. So at the moment, him being a financial advisor and supporting business owners is so far off the agenda. But hopefully that will change. So I know what I'm doing and what I'm doing it for. And therefore, I probably will continue to work till I'm 70, 75 years old and just still continue to have my hand on the tiller because I love what I do. But if you don't know what you're doing it for, then it's really difficult to be clear. And when you think about you and your business, for a lot of you, so the sole traders, you are your business, you're intertwined. For the limited company owner, it's probably the same thing. There's that hard to sort of differentiate between the two. For the multiple shareholders, it depends on the structure. But you need to be thinking as you go through that journey is, well, who am I as a business owner? What am I trying to get to? What is our purpose? But who am I also as an individual? And what do we really need? And if you can't look at those in connection, then it's very simple that you become kind of out of alignment. And that can become a problem. So the business owner on the left, you want to think about, can you afford to lose a key person within your business? Does the business have loans in there that if you lost that key person, you couldn't service? Are you extracting profits tax efficiently? Are you retaining cash within the company, but is that cash working hard for you? Are your employees, or the personal well-being, is it okay? Or are you having anxiety and stress issues that is causing people to leave the company? And you also need to think about you on a personal level. Are you setting yourself up to eventually retire at some point tax efficiently? Is your cash working? If you weren't here tomorrow, is your family going to be okay? And both of these are things that you need to think about. So again, you'll see this in the video after, and if you get in touch, I can share this with you, but they're just some questions to start asking yourself. And if you start going, I don't know, or maybe, maybe not, then you start to think, actually, I've got to really dig into a couple of those things. So it can just be used as a bit of a guide. But what we tend to find when we look at people, and I'm really sorry, I'm going to put you into a box when I say there's 4 types of people out there. And this has pretty much worked every single time. The first people, when we look forward at their life, it's you're not going to have enough. And that's okay. It's not okay if you get to age 65 and you find out I want to retire and you say, well, I don't have enough. Well, tough. You don't have time to do something about it. It's okay if you do it much earlier, because then you can put together a plan to get rid of that problem. Too much, nice problem to have. All that means is that inevitably when you go, the tax man's going to take a huge amount of money in inheritance tax. Basically, if you're married, you can pass £1 million to your loved ones. Everything over that, the government takes 40% of. And then you've got your magical, mythical unicorns. They're going to run out of money on the day that they die. The reality is we don't have euthanasia in this country, so that's very difficult to manage that way. But you do find some people where the numbers stack up and you say you look like you're going to be all right. But the fourth category is they have no idea. And that no idea causes lots of anxiety and uncertainty. So what you want to do is at least move from the no idea camp into, am I going to be okay? And when you know that, actually you become more certain, and then you can plan against it. And to do that, how many of you read Simon Sinek? Put up your hand if you have. Start with why. Well, quiet. Great book. Highly recommend it. Whether you're a business owner or an individual, you have to know your why. You have to know your purpose. You know, my why is everything I'm doing is to create a future for my family. Simple as, I'm building a legacy. And so I know exactly when I make those decisions what I'm doing. My employees know why we're doing that. My other advisors know that, because if I see a decision they make, which actually is going to potentially be at their value, not the client's value, they will get ripped to shreds. We have to always focus on, we want to have a business that is here for the generations of our clients, and having that ethos works. And as you have that really clear why, your people have that, and they can be galvanized behind your direction of travel. So having your why is really important. I'm gonna force you guys to speak now. Let me just quickly do this. I want somebody's age. Who's bold enough to give me an age? Who's gonna be that brave person?
36.
36? Perfect.
Yeah.
So we've got a 36-year-old female. This is scary. We're going to talk about why you need to plan. You, on average, will live to age 88.
Mm-hmm.
Yeah?
Yeah.
Okay, so if you retire at 65, that's 23 years of not working. You have a 25% chance of living to 96. So if you retire at 65 and have that ambition, that is 31 years, a 25% chance of not working. You have a 10% chance of getting to 100. Now, again, when you figure this is everybody in the UK, regardless of your socioeconomic background, regardless of what's happened in life, if you come from a better socioeconomic background, the chances are that you're going to live longer. And the reason I highlight this is because we're now going to talk about planning and why you have to look beyond today. Because in that example, if you're going to live on average to 96, you need to start thinking about, well, how am I going to have 31 years of finances that is going to survive me when I stop working? And why that's really important is, if you think about your income, we all have needs. And as we live our life and we go forward, we've got needs and we've got sort of wants. Now, we've been in a great position where we've had that real positive disposable income because of the way the economy has worked. And as a result, we've gone on grander holidays, we've bought nicer cars, we've bought bigger houses. The cost of living crisis means that is getting squeezed. And that comes back again to the David Brailsford, you have to get 1% better at everything you do. And you're going to have to make some choices about, do I spend on this? Do I do that big trip? Or especially because of the absolute capitulation of the pound at the moment, you're going to have to think, well, do I really go to the States on holiday, or do I travel within the UK? And actually, again, that adds to that 1% marginal gain. Because at some point, as I said, you're going to exit your business, and you always have to have in the back of your mind, are you going to be okay? Do you have a plan that's going to get you there? And what we do with clients is, and this is just to help you understand what you need to think about, you need to start charting, and I'm going to pick on the 36-year-old. You need to start charting, well, do I have a family? Well, as a consequence of that family, well, are we wanting to cover our kids' university cost or not? Okay, well, what's that going to cost? Well, where is that going to come in? Or do we want private education? Well, are we going to retire at 65, 63, 70, whatever that age is? And actually, do we want to travel more when we get to retirement? Okay, what happens when long-term care comes in? And what we do with clients is we say, well, if this is your income line, is these blue bars, and this is your expenses line that increases when things become more expensive, what's your asset pool based on what you save? And actually, where are you going to run out of money? Now, in that case, that comes back to the one type of person that was not enough. But what we can then overlay is, okay, what if you save a bit more, and therefore we're able to close down that gap and move you from running out of money at age 84 to age 90? But then what would you need to sell your business for at 65 to never have to worry about money again? And that might come out that you get a value of, in this case, £813,000. Now you've got a really clear view to say, okay, every decision I make about my business, if all things else are equal, mean that age 65, I want to have a sellable asset that is worth £813,000. Now, it might happen that between now and that point, we save more and we put more money aside in different places. And that might mean that in the future, you only have to sell for £500,000. But everybody's different. And what you need to get is a clear idea of what are you striving to achieve. And then whether that's working with Now Next Y or a business coach or your business partner and saying, how do we make sure we generate enough value within our business that we've got a saleable asset that means we can go into the wild blue yonder and retire and live that 31 years without having to worry about money? Does that make sense? Or is that stunned silence?
No, that makes sense.
Perfect. So there's a couple things here that we've got to think about you as a business owner. And I'm going to break it into three. One is keeping money in the company. Two is making it work a bit harder. And three is profit extraction. So the first, if you're keeping money in the company, so you're really concerned about the recession coming, you've got high cash reserves, you're thinking, actually, I don't want to take money out right now because actually I think I'm going to need this in the next couple of years. If you're doing any research and development, speak to somebody that does research and development vouchers, because actually often you can claim back on that. You've got some capital expenditure you can do by buying sort of capital assets that you can actually write off and get tax relief on that as well. So speak to your accountant on that. What you might say is, well, I've got a lot of money sitting in my company and I don't want to take it out because I'm okay at an individual level financially and I want to make sure I've got money there, but I've got too much cash. What you might then do is say, well, actually, do we keep the money in the company and have the company make an investment to try and grow that money over time to outpace inflation over the longer term? Remember that 20-year graph I showed you where over time that you try and grow that. And that means you don't have to pay dividend tax of getting the money out. Or alternatively, you say cash is king. Now, this is a service where if you've got really high cash reserves, it's great. It's a firm called Flagstone. And if you've got over £250,000 in cash, you can put your money into this one portal and you get access to 45 different banks. And that means you could say, well, I know I've got a corporation tax bill in 6 months' time. Well, let me put it in there at 6 months notice account and get 3% return on that. Now, in November, we expect another increase in the Bank of England base rate. And as a consequence there, you'd see that you get a higher rate because you can switch it over to another bank. Or what you might do is say, you know, you've got to have expenditure that you've got to spend on some capital equipment in 3 months' time. Then you can put on a 3 months notice account. Or you might have suppliers that you know that you're going to have to pay them in US dollars and you're concerned about the way the British pound is working at the moment. You can have it in there where you put the money into US dollars to try and hedge against a big drop in the pound. And so what you can do is try and sweat that money in the company just a bit harder. Or you make the company money work harder. So there's a whole host of things here. I'm not going to go through all of them, but things like if you're looking at an electric car, well, that's really tax efficient to write off through your company as a perk. And the government's still encouraging that. Or you might say, if you've got lots of employees in your company, what about doing an employer pension payment and actually saying, do you do it via salary sacrifice? So both you and the employee save national insurance on it. If you're trying to give your employees a benefit that doesn't cost a huge amount, maybe group death in service. Or alternatively, if you're really concerned about the NHS and thinking, well, actually, do us as directors in the company put private medical insurance for you and your family to say, well, actually, let's get the company to pay for it. Yes, it is a benefit in kind tax benefit, but actually it's cheaper than you paying for it yourself after you take the money out of the company and have dividend tax. And actually, I don't know if we want to do a show of hands here. Who here has who here has personal life insurance and they're a limited company owner? If any of you have personal life insurance and you're a limited company owner, did you know that your company can run relevant life insurance and therefore you save all the tax on the premiums and actually it's not a benefit kind expense? So there's lots of different ways that you can make this money sweat a lot harder for you. Oh, sorry, I just see somebody's coming. There we go. And then there's extracting profits. And I'm going to give you a couple examples of extracting profits. Number one is, I'm going to talk quickly about business disposal relief. You remember when I said if you have a really clear plan and you knew that you were going to have to sell your business at a certain time, what would you need to sell it for to never have to worry about money again? Well, business asset disposal relief is really helpful for that. You can sell up to £1 million in your lifetime of a value in that business and only pay 10% tax. So if you sell your business, it's a really, really attractive way to be able to extract from that business and exit and take out all that value you've accrued at a very low tax position. The other one that's one of the most attractive, without question, on the left is an employer pension contribution. So if you're a director in a company, for example, you can pay more into your personal pension. And I'll show you an example of how that works. And I'll also show you an example of something called venture capital trusts and enterprise investment schemes. I'm a pension geek, self-professed. I've been one my entire working career. And actually, if you look at it this way, if you had excess profit in the company, so I'll pick that you've got two directors within the business, you've got excess profit. You're thinking, well, we're going to have a really high corporation tax bill this year. Well, if you don't put it in a pension and you draw it out as a dividend, you'd be taxed on the profit of 19%. You'd then have your dividend tax. And again, depending on when you did this, I wrote this before the social care levy was going to be removed. So that means you would net on a £10,000 payment, you would net £5,366. If you put it into a pension, that £10,000 goes directly into your pension. It's a business expense. You've got no dividend tax on it, and you've got £10,000 saved to your company. So the difference there, just in what you're saving versus what it would have paid out, is huge. Sorry, I missed one thing I'm going to come back to. I missed this last bit of large pension commercial property, being the pension geek. The other bit you want to think about is if you do have a large pension and you've got a growing team and you need premises, can your pension buy the property? And that means then the pension charges your business the lease rate on it, and you get all of that lease rate going into your pension rather than to being a tenant that you're paying out on. Another way that's really good for profit extraction, and this works for lots of people in different scenarios, but I'll use it in this context. There's something called a venture capital trust, and the funding rounds for those are just open. If you wanted to extract profits and say get the money out, you could put 50 grand into a VCT, you would get 30% income tax relief on that. And you only have to hold that investment for 5 years. It's not as efficient as a pension, for example, but it's got a shorter hold period if you're quite young. An example of where this works is I've got a client of mine who is, they run a limited company. They're conscious that because of the age of the kids, they're going to have to draw out more money now because in the future, they're going to have to pay for private education. So what we're doing is we're between the husband and the wife that run the company, we're drawing out excess profits. We're then investing that into a VCT. They're getting the income tax relief in it, which is offsetting their dividend tax. But then in 5 years' time, when the kids go to private education, they can sell down that investment and use it to fund education. So what they're able to do is extract profits out of their company now to fund a future cost. Whereas if they just waited and kept all that profit in the company, if they took it out and we had even a higher tax rate than we've got now, they would pay a huge amount of dividend tax to get it out. So you have to look at that forward-looking view, coming back to the earlier pictures of how do we make sure you're making the right decisions for you. You've got that forward-looking plan and you'll be okay. Before I move on to protect and control, does anybody have any questions about your sort of future laid plan and what you need to consider? No? Okay. We're now going to cover off protect and control. So remember at the start of the slide where I said I'd love to say this is going to be really fun, but I'm going to talk about death and dying and all these horrible things. Unfortunately, we move to the more sort of negative side of it, but there's a reality here that we as business owners have set up this business with a desire to sort of provide for ourselves and our family. And actually, unfortunately, things happen. And that need was heightened when COVID came, and we all kind of questioned our own mortality at that point. But if you think about your business, you have to think about who is running your business today. Now that's quite academic in the sole trader, you are running your business. And actually in the limited company you run, that is you. But you might have a number of employees underneath. But what was interesting is L&G State of the Nation did a survey and a report, and they said 94% of businesses recognize they have at least one key person. And what you've got to ask yourself about your business, about your future, about recession and everything else that's coming, is if something was to happen to that key person, would your business survive? Let me give you an example. if you had, say, your head of sales and they were the key person, they managed all the relationships, they delivered 60, 70% of the sales within the company, whether they were a director in the business or not. If that person was not here tomorrow, your business would struggle. Now, that could happen because they passed away, or that could happen because they had an illness. And actually, if that was going to struggle, especially in a recession and replacing that, how would you cope? 6 in 10 businesses said they would cease trading on the loss of a key person. Now, using that salesperson in that example, that's probably highly likely. But the one that concerns me the most in there is 75% of businesses have some form of debt. Now, bounce back loans don't come with a personal guarantee, but a personal guarantee is typically required on almost all other loans that banks have given you. So again, rolling that forward, whether that's you that was to pass away or a sales director within your business that was to pass away, if suddenly you saw a 60 or 70% drop in your new business revenue or your client bank, actually, would your business survive is one question. But second of all, could you service the debt if you've got debt? Now, if you've taken out that debt with some form of personal guarantee, that is a massive concern. And actually, there's a really easy way to manage that. You just insure against it. And so using that salesperson as an example, let's say they develop 70% of the sales revenue. You ensure that if something happens to them, then as a consequence, that business would get 2, 3, 400,000 pounds of money coming into the business that will shore it up, whilst it is bringing in somebody else to make sure you can get that new salesperson to come in and deliver and fill that gap. So you can still keep your employees, you can still pay your bills, you can still service your debt, rather than potentially having a business bankruptcy and you're not only losing your business, but potentially also losing your home. And so in a period where we've got these recessionary concerns, and if something happens to key people, does your business become a bit more vulnerable to that? And that's something you have to genuinely look at. The question about do you have a pet? I was staggered there. This was from the report in 2017. 59% of business owners that had pet insurance didn't have key person insurance in place. So they insure their pet, but they don't insure the thing that's actually paying for the pet insurance. So you need to take that inward look and say, are you going to be okay? The other bit is, and I'm going to pick on, I'm going to use Teresa and myself as an example. Sorry, Teresa, I said at some point I was going to kill you off on this. So let's say Teresa and I own a business together. And Teresa likes my wife, but unfortunately, I have a really, really difficult relationship with her husband. We don't get on. And Teresa passes away tomorrow. What's going to happen? Who's responsible for running that business? Well, most likely, Teresa's surviving husband is now going to own 50% of the business. But can he add any value? We now have a sort of really fractious relationship there. And he might just be saying, do you know what? I'm just going to be a profit leech. I'm just going to sit here. I'm not going to add any value to the business. I owe half of it. Geoff, you now have to work twice as hard, and I'm just going to get you to pay out my dividends. Or he might turn around and say, you've got now 6 months to buy me out, or I'm going to sell my share to a competitor. Well, given the recession, given the cost of interest rates, can I go and raise those funds? Especially if Teresa, being as good as she is delivered half of the sales to the business. No bank is going to loan me money. And if they do, I can guarantee you I've got a personal guarantee on that loan. So what's your succession plan here? And what you've got to think about is, you set up, coming back to what I talked about, is know your why, know your purpose. If you set up your business to make sure you're looking after yourself, but also looking after your family, well, if you weren't here tomorrow, is your family going to be okay? And those are some things that every business owner needs to look at. Now, again, there's an easy way you do that. You put in what's called shareholder protection. And if something was to happen to Teresa, what would happen is immediately the insurance would come in. There would be a legal agreement in place. Teresa's partner would get the half of the business paid out as a lump sum. So they would be okay. Her family would be okay financially. I would now own 100% of the business, so I could run that business. My employees were more satisfied and clear on what our direction and vision is. I haven't lumbered the business with so much debt. I don't know if it's going to survive. I haven't taken on a personal guarantee that actually means my family's house is at risk. So in all of those scenarios, what you want to think about is, as we talked about at the start, when you think about your forward-looking plan, what are the you want to know, what do you need for your future? What do you need to make sure that you can sell the business for, so you're going to have the value that you want later on in life and you can live the lifestyle you hope for? But you also want to make sure that if something unexpected happens, how is your business going to survive? And again, I come back to these two circles. I'll send out, in fact, I'll drop in the chat box when I get a second here. I'll drop in a PDF that has these circles in there and some questions. And you almost just want to go through those and think, have I considered all of those? What does it mean for me personally? What does it mean for my business? And start thinking about this, because as much as we as business owners get so entwined in everything going on a daily basis and what's happening and the survival of that business, we also have to take stock and think about ourselves. Spencer, I asked if you could copy and paste some of those links in the chat box. I can't see the chat box because I've got the presentation up, but there's a couple tools I would really encourage you to take advantage of. So one is I put a link up for the ONS life expectancy calculator, and that's one. Two, if you want regular financial education, you can click on that link, which is the wilcoxday.co.uk, put in your email address, and you can just get regular financial education that goes through to you. You can unsubscribe at any point. But what I probably would encourage everybody to do is to click on this link that's hopefully gone in the chat box, which is the business benchmark tool. And what you can do with it is you can go in, and we don't charge anything for it. You go in and you put in how many employees do you have? What was last year's profit, turnover, and growth? What is your target growth percentage this year? A couple other questions that you put in there. And what it does is it scrapes all the data from Dun & Bradstreet. And basically what you do is you get a business benchmark tool. And it says, okay, how are you doing as a business against your sector and against companies of a similar size, regionally and across the UK? And that will look at your productivity per employee, your company profitability, your profitability per employee, and your growth targets. And what you start to do is start to get a view on actually how are you doing versus your peers. We've covered a lot. You've been an awfully quiet group, so I'm hoping that has helped and added value. I've stopped the share. Does anybody have any questions?
Simon just put one in the chat.
Yep.
Simon, are you happy
Shall
to
I,
share?
shall I ask
Yeah.
it?
Yeah.
Right, well, I'm sort of 60 plus, sort of
Yep.
semi-retired. The question my wife, not regularly, but occasionally asks me is, do we have enough to fund our lifestyle for however long we've got? And I
Yep.
generally answer the question, I don't know, in that there's plenty of sort of known unknowns, like will we need at some point care costs?
Yeah.
Will we need to fund some medical treatment that we can't get on the NHS? Those are big cost items at some point. And I end up answering, well, I think so, but I'm not sure because I don't know what's around the corner. Is there a model that? And my assumption is that our costs have obviously come down since the kids have left home and that sort of thing. They keep bouncing back, but that's another issue.
To be honest, you think you've gotten rid of them, they don't go away.
Yeah. Well, I've got my eldest was 29 last weekend, but he's still boomeranging every now and then. So my assumption is our costs have come down since they flew the nest, sort of. They'll be reasonably high sort of through our 60s to mid 70s, but as we get less active and mobile and that sort of things, our costs will then reduce, dependent on any long-term sort of end of life type costs that might be needed. But is there a model that sort of I can look at that sort of says, well, this is the sort of costs in our lifestyle that we're currently enjoying, this is the income and things like that, this is where it might lead to?
Yeah, unfortunately, there's no simple model because there's so many moving parts in there, and
exactly,
it all comes down to the lifestyle you want. So what I'm happy to do is we can have a conversation offline. We can build a you basically do some homework, which gives me lots of the data. So how much you have in pensions, blah 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 blah. But then what we do is we start to build a model, and sometimes we come up, and I've pulled this up again, is we might come into the view that, you know, if you said you wanted to, until from 65 till 75, you wanted to live off, I don't know, 40 or 50,000 pounds or 60,000 pounds because you wanted X amount per month, and then what you wanted extra travel. And then after that, we assume that your travel is going to stop because your knees and your joints go and everything else, then your cost base drops. But then you have to build in a cost of care later on, because the simple reality is we live long enough, we are going to have a cost of care.
Yeah.
What we then do is we don't tend to build in things like downsizing unless you know you're going to. So I just did this with a family, a couple that's 70 years old, and they were really concerned of the cost of living. And I said, okay, do you know what? You can spend an extra £1,000 a month at the moment to what you currently do, and you should be okay. But don't forget, if you downsize and take £300,000 of value out of the house, that should more than meet your cost need when you become into that point of cost of care and everything else. So unfortunately, there's no magic number, because your needs of what you want to do in life, you know, if your goal is to travel the world and do everything else, you're going to need a hell of a lot of money. If your goal is, I want to spend some time gardening in the back garden and see my grandkids, actually, you don't need as much. And so we need to almost kind of work back the way and figure out, or work forward the way to say, what do you need? And then start to overlay all of the individual finance associated. But drop me a line after, and we can tee something up if that helps.
Okay. All right. Lovely. Thank you, Geoff.
And if you don't have to use us, you can use any financial advisor. It's a plug for me. The first thing you want to ask a financial advisor is, do they do cash flow modeling? Because that to me is absolutely, it sounds like what you need. And it's that bit of going, do you have enough or not? And that's the simple answer.